Hey traders, welcome back to Day Trading with Susie, where we break down the big, the bold, and occasionally the baffling world of day trading with a side of chocolate. Today we're diving into the explosive world of breakout strategies. Are you ready to learn how to spot those market breakouts and make them work for you? Buckle up. It's going to be a wild ride. All right, let's get to the chase. Breakout strategies are the superheroes of day trading strategies. They burst on the scene with dramatic flair and defy the odds and can potentially make you a pile of cash if you play your cards right. But beware, without the right approach, you might end up with nothing more than broken dreams. So how do you avoid the latter? Well, let's break it down. First off, you need to identify the breakout zone. This is where the magic, or should I say the potential mayhem, happens. Look for stocks or assets that are consolidating in a tight range. Imagine a pressure cooker when it's building up steam, and when the lid finally blows, things get really exciting. Picture this. You're eyeing a stock that's been trading sideways between $4.54 and $4.92 for what feels like forever. It's like watching paint dry, but more profitable. Suddenly, the stock breaks above $4.94 with a surge of volume and a very strong buy alert. Boom, that's your signal. You enter the trade with your $5.70 target. It's like waiting for the balloon to pop and catching it in midair. Tip number 2, volume is the sidekick that you never knew you needed. When a stock breaks out, you want to see a spike in volume. If the breakout happens with low volume, it's like trying to celebrate with a confetti cannon that's out of confetti. There's no real excitement. High volume confirms that others are seeing the same thing that you are seeing, making it a more reliable signal. Let's say you're in our little group of day traders on August 13th, 2024, and you see ELWS on your watch list. It's breaking out of a $2.94 resistance level at 8:23 a.m. The volume is skyrocketing, and you're practically doing a victory dance at your desk. But wait, if volume is weak, and the stock is only inching above that $2.98 level, it might be a false alarm. Think of volume like applause at a concert. If it's really loud, then the band is really rocking. If it's quiet, you might want to leave the concert early. Tip number 3, technical indicators are like your trusty map when exploring uncharted territory. Indicators such as our custom Trend Hunter or EMAs can help you confirm the breakout. If your indicators are showing bullish signals, it's like having a green light to proceed. Imagine you're looking at AIRI on August 22nd at 7:57 a.m. and it's breaking out of the pre-market high, and the Trend Hunter gives you a strong buy signal. It's like your GPS is giving you the thumbs up. You're on the right track. Meanwhile, all the EMAs are pointing up and price is holding that 9 EMA, indicating bullish momentum. Now, you're not just seeing the breakout, you're getting a confirmation party. Tip number 4, manage your risk. Even with a solid breakout, things can go sideways faster than you can say losses. It's crucial to manage your risk. Set a mental stop loss level below the breakout point. This helps you cut your losses if the breakout fails and if price starts to fall back. So you enter a trade of AIRI at $6.84 when the stock breaks out above resistance. But if the market starts to reverse, don't panic. If you set your mental stop loss at the pre-market high of $6.74, which had been resistance, your risk is almost zero and you're ready to exit the trade before it goes ugly. It's like having an emergency exit strategy at a concert, just in case the music turns into noise. Tip number 5, watch for fakeouts. Not every breakout is a true breakout. Sometimes you might experience a fake out where price initially breaks out but then quickly falls back to the previous range. To avoid getting caught in these traps, wait for confirmation. A true breakout should maintain previous resistance or support level, not just dance above it for a couple of minutes before dropping. Now, it's August 28th, 2024, and you spot a buy signal at 8:35 a.m. at $6.49 as price is breaking above the 50 EMA. and this support level here. But after a few minutes, price starts to drop back down to, and even a little below that $6.31 support level. And then a few minutes later, price flat out failed that level big time. It turns out it was just a brief flirtation, not a full-blown relationship. Lesson learned. Always wait for confirmation before getting too excited. One trick to use to help avoid this kind of fake out is to pay attention to the overall direction of the 50 EMA and the 200 EMA. If you see those starting to flatten out, watch out. You can almost assuredly expect false signals and failing breakouts. Tip number 6. Plan your entry and exit points. Having a solid plan is like having a roadmap for a road trip. Decide beforehand where you'll enter the trade and where you'll take profits and where your stop loss will be. This helps you stay disciplined and avoid making impulsive decisions based on emotions. Okay, so it's August 22nd and you're looking at AIRI and you plan to enter on a buy alert at above the pre-market high of $6.77 with a target of $9 and a stop loss of $6.62. As the stock moves, you stick to your plan and exit at your $9 target when you hit your target. It's like following a well laid out map on a road trip. Smooth sailing with a clear destination. Tip number 7. Be prepared for volatility. Breakouts can be wild rides, and volatility is part of the package. Be prepared for rapid price movements and have your strategy ready to handle the ups and the downs. This is where your risk management and planning come into play. So August 28th, you enter a trade of AIRI during a breakout, and price starts widening the range massively and then halting. Instead of freaking out, you stick to your plan and you let the trade play out. The price eventually hits your target. And you're celebrating with a successful ride of $3,625 profit. You made it. It's like enjoying a thrill of a roller coaster ride, knowing that you've got a safety harness. All right, traders, now you've got the lowdown on how to trade the breakout strategy like a pro. But if you're itching for more insider tips and tricks and a little extra guidance to up your trading game, don't miss out on my free web classes. These sessions are packed with actionable insights and you can sign up for them right now at momentumstocktraders.com. Come join the fun and let's make those breakout trades count. And thanks for hanging out with me today. Remember, in trading, it's all about spotting those opportunities and managing your risks and riding the waves of the market. Keep those strategies sharp, stay disciplined, and may your trading be as explosive as a perfect breakout. Until next time, happy trading. See you in the next video.